Welcome back. The UBS India conference, it's a big one, which is getting underway here in Mumbai. Gautam Chachoria is with us. He's head of global markets India at UBS. Gautam, great to have you with us here. Appreciate you joining us. Action-packed next couple of days, Gautam. Tell us a little bit about the size and scale of conference, what you're aiming to do here. Of course, I mean, the basic aim at any conference is getting investors face time with corporates. But what do you plan to sort of, what are the big themes in that sense, which you hope will come up and get answered as part of this process?
Thanks, and good morning, everyone. Again, very exciting. It's a bigger event this year than last year and earlier. We have more than 250 plus investors and 65 or 70 odd corporates. But again, beyond that, we have interesting panels, including from government officials, ex-RBI officials, panels on consumption, on AI, on manufacturing, defense. So host of thematic panels, which we have curated for our investor base to hopefully get something out from this conference. And beyond that, we have multiple tours going on. Like we did a couple of days of macro tour in Delhi and Bombay last couple of days. And we have thematic tours on the ground consumption, manufacturing, defense, etc. Again, the big themes, obviously, from talking to investors, this is still early discussions, is around what happens to growth in India second half and later, and also the trade deal, and the big longer-term thematic around manufacturing as to whether we see more manufacturing, specifically around defense, but in a broad way, pick up in India.
In terms of the foreign participation, Gautam, hi. So, what is your expectation in terms of just where investors are coming from? Because a lot of them have given India the skip, right, in this calendar year. They've gone to other Asian markets. And the biggest grouse is that India doesn't have a deep tech story. So, what's your sense? Do you see that tide turning, even in your conversations in the run-up to the conference?
So look, a few things. One, we are seeing increased foreign investor participation this year. So we have more number of investors traveling. And this is across the world, not just US, but across countries in Europe and even Asia. Beyond Hong Kong, Singapore, we have investors attending the conference. Okay, so that's the first point. Second is, look, foreign investors have not been investing in India in aggregate for last 5 years, not just last few months. Beyond the yearly buying and selling, net they haven't invested literally anything over the last 5 years. The last few months, obviously, there's an AI and tech thing, there's the India-US trade deal, valuations, and opportunities in other markets in Asia. So that's not helped also. But what we have seen in the last couple of months, and more so in the run of the conference also, is we are seeing interest pick up in bottom-up stock ideas. So we're still not seeing foreign investors talking, okay, let's allocate a lot more money to India, it's bottoming out, etc. But we are seeing in the last 2 months a bottom-up discussion. And it's across sectors, not just one sector. Whether it's financials, consumption, obviously, but even manufacturing, defense, etc. We're seeing a lot more discussion from the team here, sales and research, with foreign investors on bottom-up ideas.
All right. Hi, Gautam. Good morning. Good to see you, Ben. And you were quite positive on consumption, namely the two-wheeler and the four-wheelers. And actually, the last couple of months have worked out very well for them. What is your view right now? And from the auto pack itself, consumption/auto, what do you like?
So look, broader consumption theme we continue to like. There are enough tailwinds in this sector. Rural, urban, credit, obviously the government policies around GST and upcoming pay commission and some of the freebies. But again, it has to be more stock and sub-segment specific, not just sector specific, but sub-segments. Like in autos, the theme which we have been pushing is more premiumization. And within two-wheeler, scooter and EVs, rather than a broad two-wheeler or broad four-wheelers. So it's also stock specific. It's not a very broad-based view. Again, in the last couple of months, everything has benefited. But for the discerning investor going forward, these themes will matter more because that's where we see higher visibility and higher comfort of growth actually playing through. So we are much more comfortable about the premiumization theme than aggregate, say, car sales volumes, which at the margin, in fact, two-wheeler and cars both, the expectations might be running a bit ahead versus what our analyst thinks. We are much more cautious on the industry level volume outlook being priced in the market. But at a stock and sub-segment level, there are opportunities. The broader consumption beyond autos still looks attractive, whether it's retail, whether it's food delivery, QSR, selective FMCG also. So broader consumption, we remain constructive.
Okay, so constructive on some of the broader, consumption themes. You mentioned, manufacturing, and there will be obviously more conversations around that theme at the conference as well. Right now, what's the house view? And when it comes to the whole capex side of the market, what is the position? Because a lot of these stocks, obviously, through the course of the last several months, they've come off their very high, very lofty levels.
So again, similar to consumption, there is pockets which we are very, very high conviction on, pockets in defense, but also in the capex cycle part, specifically around energy, around renewables. They remain attractive, both near term as well as from a longer term cycle, including what they're pricing in. So that remains an attractive space in general for us. And again, in the last quarter or two, we are seeing some pickup or at least stabilization in private capex. It's no longer a drag or not growing enough. Will it be a proper full-fledged private corporate capex cycle? I think it's too early and premature. And one of the things which we have been telling and we'll highlight again, it's that one of the things we have to remember, don't compare it with what we saw in, say, 2004 to 7. That kind of private corporate capex cycle, if you are defining in that parameter, that's going to be difficult. But from where we are now, uptick in the next couple of years is fairly likely.
I know index targets are what they are, Gautam, but 2026, what's the Nifty target for you?
So we don't have an official target for Nifty for next year, but we do see a small upside from here for sure. Look, at a broader market level, there is the flows from retail investors, mutual fund, which will help stabilize markets. On the other hand, there's also a big pipeline of capital raising, which also sucks away some of the liquidity. So on a technical side, it seems to be a more range-bound outlook. But on the fundamental side, that's the key part. So we are expecting growth to pick up as the policy easing flows to the economy. The only joker in the pack is some level of sentiment and uncertainty, specifically around US trade deal. I think that's also a question of time. We will have clarity around that, and then hopefully we'll see a growth pickup. Yeah. And that will be the key for markets to break out of the band we have seen in the last couple of years.
Yeah. You mentioned AI once or twice there, Gautam. We had S. Narain who was saying, and others as well, that yes, this AI, for the lack of a better word, mania around the world fades a little bit. Maybe people will start to notice other things as well, foreign investors particularly. Do you believe that?
So look, there are strong views on both sides. Even a global strategists and economists have published something around what it could mean. Again, the way we look at it, the benefits of AI is going to be long term. Where we are right now is very early stage of creating the capital base or capital stock to drive the AI benefits. We are nowhere in the long-term cycle of the benefits of AI flowing through to normal businesses in their normal workflow processes, etc. That's very, very early. So we are still at a very early stage of creating the capital stock. Now, is there a bubble in the creating the capital stock? It's happened at a very fast level. The business opportunity is real. The answer to that will lie how quickly the benefits to the business flow. So I won't say that it's necessarily a bubble, because this is a big change in how businesses are done globally, not just for AI companies, but also normal businesses in terms of how they use, leverage and apply AI in their business. So I won't get carried away by simply saying it's a bubble.
Okay.
Too early for that.
All right, Gautam, thank you for joining us this morning. I wish you all the very best for the conference. I'm sure it's going to be action-packed, and we look forward to connecting again, maybe once it's in its final lap, to get a sense of what investors are really saying. Thank you for joining us today.